If you're a high-income earner, listen up, because the world of IRS audits has completely changed. The old rules are out the window, and we're now in a new AI-powered reality. Understanding this shift isn't just a good idea. Honestly, it's absolutely essential if you want to protect your wealth. You can almost feel that, can't you? That sharp intake of breath. That single envelope from the IRS is probably one of the most stressful pieces of mail anyone can ever get. It's this universal feeling of dread, and for a growing number of higher earners, it's becoming a very real possibility. And here's why that feeling is more relevant than ever. Let's just put a number on it. If you earn over $10 million, your chance of an audit has jumped to a staggering 1 in 6. And to be perfectly clear, these aren't just random checks anymore. This is strategic, data-driven targeting. So, how do you navigate this new world? Well, we've laid out a clear path for you in this explainer. First, we're going to break down the new audit landscape. Then, we'll pinpoint the biggest red flags the IRS is looking for. After that, we'll walk through a strategic plan for what to do if you get that notice. And finally, we'll talk about how to build a rock-solid defense. All right, let's dive into the big picture. Why is all of this happening right now? Well, the short answer is that the IRS you might have dealt with even 5 years ago, it's gone. The agency has fundamentally transformed, both in its resources and its capabilities. It all starts with money. A massive $80 billion injection of cash, the largest funding increase in the agency's history. And that money came with very specific instructions. Focus enforcement on taxpayers earning over $400,000. So this isn't just more money, it's targeted money. And this just shows you the night and day difference. We've moved away from an era of slow, manual reviews and somewhat random selections. Today's IRS is a different beast entirely. It's powered by AI-driven analysis, predictive analytics, and it pulls in data from all over the place to find its targets with almost surgical precision. So how does this new AI actually think? You can think of it like a digital bloodhound. It's programmed for pattern recognition, so it can spot weird things, like a mismatch between your reported income and, say, your lifestyle. It uses predictive models to flag returns it thinks are risky. And it's constantly pulling in external data from banks, public records, even social media to build a complete picture. This lets it launch these hyper-targeted campaigns on things like private jet use or complicated international assets. So what exactly is this digital bloodhound looking for? Let's get into the specifics and break down the top red flags it's programmed to find. Because really, knowing the triggers is the first step to avoiding them. Okay, first up, income. The most basic trigger is just a simple data mismatch. The IRS gets a copy of all your W-2s, your 1099s, your K-1s. Their computers automatically check those against what you filed. Any difference is an instant flag. The AI also hunts for big, unexplained swings in your income from one year to the next. And it's now laser-focused on unreported crypto activity, and that's not just selling for cash, but also crypto-to-crypto trades. Now, let's talk deductions. You see, the IRS keeps incredibly detailed data on what's normal for expenses in every industry. So if the average for your business is what we see in that first bar, but your deductions are way higher, like we see in the second bar, say, over 120% of the norm, that's a huge signal to the algorithm to take a closer look at your return. And digging a little deeper, some deductions are just naturally higher risk. Things like home office claims on multi-million-dollar homes or massive travel expenses. Charitable giving gets intense scrutiny too, especially big non-cash gifts that don't have a proper valuation. And if you have a side business that's constantly losing money year after year, the IRS is going to start wondering if it's a real business or just a hobby you're using for write-offs. Finally, we've got the really big hotspots: complex investments and international assets. Forgetting to file the right forms for foreign accounts, like the FBAR for accounts over $10,000, that is a massive red flag. The IRS is also actively targeting specific complex investment strategies that it considers potentially abusive. And as we've said, any activity on foreign crypto exchanges is now definitely on their radar. So, what happens if, despite all your best efforts, that dreaded notice shows up in your mailbox? Well, panic is not a strategy. What you do next is absolutely critical, and there's a clear, strategic way to respond. The first 30 days can literally determine the entire outcome of the audit. In that first week, you have to dissect the notice. What are they looking at and for which tax years? By week 2, you must engage a professional. I'm telling you, for a high-income audit, this is not a do-it-yourself project. Then by the end of the month, your representative needs to be preparing a complete, organized response. Procrastination here is your absolute worst enemy. It's also really important to understand what kind of audit you're even facing. A correspondence audit is all done through the mail. It might sound simple, but it can escalate fast. An office audit means you're going to an IRS office to meet an agent face to face. But the most comprehensive and highest risk is the field audit. That's where an agent comes to your home or your business. I keep saying professional help is essential, and here's exactly why. First, they manage the insane technical complexity of high-income tax returns. Second, they act as a buffer. They handle all communication with the IRS so you don't accidentally say something that makes things worse. And most importantly, they know how to negotiate. They understand the procedures and the strategies to get a settlement you probably couldn't get on your own. You know, the best way to win an audit is to never have one in the first place, right? So this final section is all about being proactive. It's about building a financial life that is as audit resistant as possible. And here's a simple 4-step framework you can use. Step 1. Every single year, before you file, assess your risk. Look for these red flags. Step 2. Don't wait for a notice to find an expert. Build that team now. Step 3. Document everything. And I mean everything. Your records need to be institutional grade. And finally, step 4. Have a written plan, a protocol, so that if a notice does arrive, your team knows exactly what to do from minute 1. Ultimately, this all comes down to shifting your mindset. You need to stop thinking of professional audit defense and prep as a cost. It's not an expense. It's insurance. It's an essential investment to protect your entire financial position against an IRS that is better funded, more advanced, and way more aggressive than ever before. And this is the question I want to leave you with. You used a sophisticated strategy to build your wealth, right? It only makes sense to apply that same level of strategic thinking to protecting it. So is your defense as well planned as your offense? Because in this new reality, it absolutely has to be.